Hello, this is the Daily Forex Report for July 28th. We are looking at the U.S.-Japanese yen pair. This particular pair closed down after moving higher. It did move basically right up to some previous support that would now be resistance area. We are looking for this pair to continue moving sideways with a bias that is sideways. Look for it to potentially go as high as 88.55, possibly as low as 86.70. Look for some resistance around 88.15 and look for some support around 87.25. Now looking at the Euro USD pair, this pair created a doji bar for the second day in a row, an inside bar doji bar, which is quite significant. We'll talk about that a little bit later. This pair overall, though, has been moving sideways with a slight bias to the upside. Look for it to potentially go as high as 131.12, possibly as low as 128.81. Look for some resistance around 130.50, and look for some support around 129.25. Now the pound US dollar pair has created a doji bar, did close higher. This pair is moving up to moving to the upside, biased is up. Look for it to potentially go as high as 157.20, possibly as low as 154.50. Look for some resistance around 156.50 and look for some support around 155.25. Okay, now looking at the US Swiss, this particular pair created an inside bar as well. Did close down for this previous session, overall moving sideways with a bias that is sideways. Look for it to potentially go as high as 106.86, possibly as low as 104.78. Look for some resistance around 106.50 and look for some support around 105.35. Well, as far as news announcements go, we have quite a few actually. We have the Euro releasing the German unemployment change at 3:55 a.m. Eastern Time tomorrow. Consensus is that it has dropped a little bit from 7.7% down to 7.6%, which could be good news for the euro, considering the German economy is a very large part of the euro. We also have at 7:30 p.m. Eastern Time the Japanese jobless rate. Consensus on that one is that it's held at 5.2%. We also have the CPI for Japan being released. Consensus on that is that it's improved by a little bit year to date from negative 0.9% to a negative 0.7%. So make sure to watch all those news announcements as they come out. Now I want to talk about several trades. We have kind of want to show you one way you can determine what would be a better trade over the other. As we talked about earlier, we have an inside bar, two doji bars with an inside bar on the second one. We do have an area right here of resistance for this particular bar and support for this particular bar. So we have a support and resistance play here. We have a breakout of a doji bar. If it does move to the upside, I do believe it will zip through that. Zip through the 130.44 to 130.97 mark really quick, producing about a 52 pip move. Now that's a very good trade setup, backed by support and resistance. Now we have another one to the downside right here, and it does have an area right about here of support, previous support, but if it comes on down a little bit further, we have another area as well as a final area of support that's been fairly quick. So basically looking to buy and looking to exit. And let me zoom back in now that we have some lines on the chart. So look to buy and then look to exit the trade. But this candle was over 50 pips, so if you did a one-to-one risk to reward, you'd still be within the range of basic market action, so you'd have to really catch a breakout. Now, if you took a short here to the downside and you look for it to come all the way down here, you do have some areas of support that you could go to break even at, but overall you have about a 200 pip move, 214 pip move or so, and if you risk say just 100 pips, you would be above this area of support that we've had or of resistance that we've had recently. So if it does move to the downside, there's a really good chance that it can retrace back to this point, and your risk to reward at that point is 2 to 1. You're basically looking to gain 200 pips and only risking 100. So in a lot of ways, the second trade to the downside is a much better trade, even though the overall movement has been to the upside. This lets me, the fact that we had 2 doji bars in a row, one was an inside bar, really ups the odds for it to come on down. Now let's take a look at a few others. We have the pound US dollar pair, and this particular pair has created a little window. We have a low here, and we also have a high here. So we have an area of support and we have an area of resistance. Now if this pulls back, this is also somewhat of a doji bar. It's getting a little thick on the body. I'd still consider it a doji bar, which doji bars have long candles on both ends of the body, and it usually signals a reversal. So if we get a reversal, it could come down here and move through it real quick, breaking through support for this bar and hitting resistance for this bar, and you could exit really quick. Here again is a little lopsided unless you used a 1-to-1. You're grabbing about 30 pips, so if you did 30 pips, you would still be within market action. To get out of market action, you'd have to do 90 pips, maybe around 93 pips, so your trade would be definitely lopsided. The odds of that go up as far as profitability, but of course if it goes against you, you're going to lose more. And last but not least, we have the US Swiss, and this pair created an inside bar as well. If it moves to the downside, got a couple of options here. You got one area of support, you have another area of support, and then you come on down to around this area. So you have lots of choices on where to go to break even. You go to break even 22 pips, 54 pips, or 74 pips. You could exit at any of these or go to break even. To the upside, we have to zoom out a little bit. We have a breakout. The next obvious place would be right here. We have an area of resistance that has 3 or 4 bars in it. Once we get a break above that, though, it goes up a little higher. So this may be a good play to watch it break out to the upside. Potentially have some pretty decent moves if it continues to go on up. Well, that about does it for today. Until next time, this is Jason Fielder. Good trading.